Hello and welcome. In today's video, we're going to take a very quick look at some of the FHA mortgage updates for 2026. If you're a home buyer and you have questions, please reach out to us at FHAMortgageSource.com. Okay, so we're going to quickly just cover some updates with the standard FHA purchase program, FHA 203K loans, and then the refinance options, your streamline rate and term refinance, and also FHA cash out refinance options. Okay, so the first big change, of course, is the FHA mortgage limits. They have increased yet again this year. For most locations throughout the U.S., a standard one unit property, the limit would be $541,287. That's going to be most locations throughout the U.S. Many locations outside or right around major cities, it can be slightly more than that, maybe 547,000, but generally for your regular normal, we call them low cost areas, there the locations would be 541,287. And then some areas in high cost areas, think maybe coastal California, many counties like Orange County and throughout the more high cost locations, those limits can be over 1.2 million for an FHA loan. Again, this is just for the one unit properties. Of course, if you have a duplex, triplex, you can see how the limits go up for multi-unit properties. But that is the limits for this year. Okay, so for the standard FHA purchase program, again, the new loan limits, 541 and change for most locations. Minimum down payment with FHA, 3.5% down payment. There are 100% financing options with FHA with approved down payment assistance. There's many new down payment assistance options that have come out over the last few years. So it's important, depending on your property location, your state and county, there certainly could be an option there to do 100% financing with a down payment assistance. So be sure to contact us if you're interested in that. Of course, FHA is just standard government-backed 30-year fixed, 15-year fixed terms. There's no early payoff penalties or prepayment penalties with this or any other government program. Generally, FHA loans, this can fluctuate slightly depending on the lender or bank, but the credit score requirements are generally a 580 to a 620 for those buyers that are doing the maximum amount of financing. Most down payment assistance options, those will require a little bit higher credit scores, maybe 640 or greater. And then home buyers that may have less than perfect credit, maybe below a 600 credit score, many times they still do have options for financing with a 5 or a 10% down payment. So a little bit greater down payment definitely opens up some options and flexibility for buyers that may have a lower credit score. Okay, so the home buyer's closing cost, FHA again has the 3.5% down payment. Like any other loan, there's going to be additional closing costs, which is generally it can range from maybe 2.5 to maybe 4.5%, the general range for closing costs and prepaid escrows. Those can be paid by the home seller. FHA allows that, so the buyer would only need to bring the down payment, not the down payment plus the expense for all the closing costs. FHA mortgage insurance premiums, the one-time premium, it can be and most often is rolled into the loan, the home buyer's loan. And again, FHA's for any single family home, townhome, or approved condominium. Okay, and one other thing is that for the down payment with FHA loans, gift funds are permitted. Okay, so maybe if you have a family member that wants to gift the money to you for the 3.5% down payment, that is permitted. And non-occupying co-borrowers are permitted. This is an option to help maybe for your debt to income ratios. Maybe you need additional income on your application in order to qualify. Uh, so FHA does allow a non-occupying co-borrower to help you get qualified. Low cash reserves, really for FHA loans and most government loans, compared to conventional loan programs. FHA is especially just a great option for first-time home buyers that really have little money saved. And again, there are many expanded down payment assistance options or DPA options in 2026. Okay, briefly on just some of the refinance options, mainly the streamline refinance. This is just for a rate and term refinance. Maybe someone has, they don't want to cash out any equity or anything like that. They simply just want to reduce their interest rate. The FHA streamline refinance makes this really easy. Basically, like the name says, it's a streamlined process. Generally, no appraisal, and homeowners can be upside down or whatever on their home value. That's often permitted, and it's streamlined documentation and paperwork, not like the purchase loan that you originally did. It's a very streamlined process, and again, this is great for home buyers that maybe just want to reduce the interest rate on their loan. Something that, especially if you're a home buyer that has purchased over the last 2, maybe 3 years, this FHA Streamline may be something you want to look into because interest rates have started to come back down really in the last part of 2025, and going into 2026, they're expected to come down a little bit more. So again, if you purchased over the last maybe 2, 3 years, when rates were pretty elevated, up around the 7% or more range, you certainly would want to make a call and reach out to us just to see what your options are for that. Homeowners that do have equity, um, FHA does have a cash out refinance option available as well. There are limits there on the loan to value. This, though, will work more like your original purchase loan, where you'll be required often to get a new appraisal. But homeowners that have equity, maybe you've been in your house for an extended period of time, you want to maybe do cash out some equity to do maybe a debt consolidation or maybe some improvements, remodel around the house. This is certainly an option to look at. Okay, and then there's an FHA 203K loan. This is a special renovation or rehab mortgage that provides financing for both the purchase and repair of a property of a home. Maybe you have a property you like, but it needs certain things like a new roof or maybe some plumbing, electrical work or whatever. FHA 203K is the option for that, and you can finance basically post-closing repairs needed to make the home livable. Appraisals are generally based on the after improved value of the property, and it's only 3.5% down, just like your standard FHA purchase loan. And this is only for primary residences. If you have an investment property that you may want to repair and flip, that's not what the FHA 203K is for. It's just investment property purchases. I'm sorry, primary residence purchases. Okay, that's a basic recap of the changes for 2026. Again, if you're a home buyer and you have questions about any of the FHA financing options, please call us at 800-743-7556 or visit FHAMortgageSource.com. Thank you.